Today, I'm pleased to be joined by Norman Macleod. Norman is Head of Acquisition at Wealth Holdings. My name is Sue Whitbread. I'm editor here at IFA Magazine. And today I'm going to be talking to Norman about the marketplace for buying and selling advice and financial planning firms. So Norman, welcome to IFA Magazine.
Hi there, good to be here.
Perhaps it's our pleasure to have a little chat. Perhaps we could just kick off by asking a little bit about you and your background, and you could just give us some idea as to your role at Wealth Holdings and what it is that you do.
Okay, well, I'm a relatively late entrant into the financial services industry. I'd worked in financial publishing in my 20s, but then completely changed direction and worked in the arts and culture sector for 20 years as a sort of fundraiser, commercial development person. But then changing my personal circumstances some years back required a rethink. And I found myself working with a national consolidator for a number of years, where I was involved in something around about 50 deals in one way or another. After leaving there, I started working with some former colleagues, Keith Brown and Debbie Dry, and more recently Andrew Smith at Wealth Holdings, to build a sort of brokerage consultancy business working in the M&A sector with IFAs and wealth managers. So we've been working together for the last couple of years. We're now very busy with both buyers and sellers, so here we are. I'm head of acquisition, so I guess my primary role is to be the kind of the first person that you encounter in the market, whether you're a buyer or a seller. We're working with 30, 40 buyers, most of whom I brought alongside the business, and my primary function now is to find willing sellers for those buyers to acquire. So that's my title, Head of Acquisition.
So you mentioned there, Norman, that you're very busy at the moment. So I wondered, what are the current trends that you're seeing in the market for buying and selling IFA businesses at the moment?
Well, I think one of the reasons we're busy is that a lot of M&A activity got kind of put on hold or slowed down during lockdown. People were reluctant, whilst the future looked sort of quite uncertain, were reluctant to commit to, certainly if you're a seller, what's probably a once in a lifetime event transaction. You know, selling your business, you only do it once, so you want to get it absolutely right. So I think that slowed the market down to some point. Now we're seeing a sort of resumption of something approaching normality. So deals that were under discussion over the past year are now sort of completing at a rate of knots as confidence recovers. So we're seeing activity, I mean, across the board, really. I mean, in terms of the people that we're working with, it's everything from, well, I've got one guy who's got a 7.5 million funds under management client bank who's looking for a buyer. We've just recently signed up another client who is on the buy side, and they have an appetite for firms with anything up to 1.5 billion in funds under management. So, yeah, and of course, everything in between. So I think as far as trends in the market are concerned, it's difficult to sort of identify specific trends, but what we have seen is a speeding up in the market. And of course, there is the continued flow of private equity money into the sector. They see tremendous value to be had on behalf of their investors. So that's a significant part of what we're seeing in the market at the moment, and that's driving activity, as I said, from the bottom end of the market right up to the very top, national businesses.
What's really driving those changes then?
Well, I guess you've got. It's often pointed out that the average age of advisors and business owners is relatively high. I think it's something like 58, 59, 60, depending on which data set you look at. So inevitably, that's a factor. There are lots of businesses that are or will be in the not too distant future looking for buyers, and the private equity money sees value in those businesses. I think primarily because of the stickability, if you like, of the income streams. I've read, and again, you take these figures with a pinch of salt, but I've read that the average lifespan of a client-advisor relationship is something like 16 years. So that's very attractive. If you've got, an average income stream that is steady for 16 years or thereabouts post-acquisition, then from an investor point of view, that's hugely valuable.
So would you say that now is a good time for businesses to consider, or business owners, I should say, to consider buying or selling?
Well, I think it depends who you listen to. I mean, there are brokers in the market who, are doing similar work to ourselves. But as far as they're concerned, it's always a good time or the best time to be selling. Because needless to say, like anybody else, they need to generate business. They need to attract clients. So one way of doing that is saying now is the very best time to sell your business. I don't necessarily think that there is a good or a bad time to sell the business. In the same way that an investor is foolish if he thinks he can time the market, I think it's similar if you're buying or selling a business. It's more a question of taking the time and preparing yourself and making sure that you find the right business to buy your business, or you find the right business for your business to acquire. And I think that's where we come in and add value for our clients. You can find a good buyer or a good seller at any given point. It's a question of who is the right fit, and the kind of work that we do with buyers to refine, if you like, what they think they're looking for, because there can be any number of factors that might make life difficult for you post-acquisition. So it's about kind of interrogating people's expansion plans, but also interrogating, if you're a seller, your plans. What are you looking for? What best suits your clients? What works for your staff? What will help you achieve the best price for your business? Because it's a once in a lifetime thing for most people. They only ever sell one business. So we kind of work with buyers and sellers to help them, if you like, not make the many kind of avoidable mistakes that can lead to poor outcomes down the line. And of course, a transaction is only successful if it's successful for the buyer, also for the seller, but primarily for the clients. Because if it's not right for the clients don't stick around. The seller doesn't get the full consideration for the business, and the buyer has bought a dud. So we're there to ensure that the focus is on client outcomes, and if you get that side of it right, then everything else follows from that.
And I guess there's a period of time to run up to this, the point where the business is ready to go for sale. Is that something that you would help the firm with to make sure they're in the best possible shape for it?
Absolutely. I mean, buyers are usually quite clear about what they want, and a lot of what they're looking for is similar. They want clean, well-run businesses without dodgy histories of off-piste investments, shoddily done defined benefit transfers, that sort of thing. They like to see clean client data that's easy to interrogate. They like a business that will move as smoothly as possible into their own. So not too many rough edges. They don't like to see sort of idiosyncratic ways of doing things. They like things done by the book. So if, for instance, you've been picking all your own funds, that's likely not to be attractive to a buyer. So there are any number of variables within it that can kind of knock the value if you're a seller. So we would help and guide you get your business into the right shape for sale. Sometimes that is, you know, you do come across businesses that are absolutely sale ready. But often there's, you know, 6 months, a year, possibly more, a period of work that needs to be done to get you in absolutely sort of optimal condition in order that you achieve the best price. So it's not necessarily, you know, a quick thing. And also, you know, we spend a lot of time discussing potential buyers with sellers, talking about the culture, the advisors, the investment proposition. It's not just a question of us introducing, you know, your business to as many buyers as possible. We want to kind of optimize the time that business owners spend on this. So we do the work for them, if you like, the deep background research on buying firms and selling firms, so that we can do that matchmaking process, and you don't spend too much time dancing around the handbags, as it were, that you are introduced only to appropriate buyers or sellers. That's where we add value. Rather than, if I can use an analogy, it's a bit, we think of ourselves as like a kind of executive search headhunter type operation, as opposed to a high street recruiter who's looking for volume and a throughput of as many CVs as possible. We're looking to do the deep background and introduce a small number of candidates who are all, you know, eminently qualified, if you like.
Good analogy. I think that gives us a very clear idea as to the positioning of your business and how you can add value.
Yeah.
So finally, then, I'm going to ask you now to get your crystal ball out and perhaps give us an idea of what potential changes you see coming in the near to medium term.
I don't know if there'll be any drastic changes. I think there'll be a continued inflow of private equity money, because I think, you know, the smart money got in there quickly, but, you know, they're seeing, you know, there are several new private equity backed consolidators in the market who are doing, you know, who are very busy acquiring businesses. I think that will be attracting other private equity investors, seeing that there are deals to be done, and good deals to be done. So I expect that trend to continue into the future of private equity investment being a major factor. I think the continued difficulties in the PI market will be a driver for smaller businesses to consider, you know, is this worth my while? You know, I'm spending an inordinate amount of my time just trying to ensure the business, you know, is this what I want to be doing? I guess the FSCS levy, all these factors will continue to put pressure, particularly on smaller businesses, I would think. One thing that we've noticed recently are, you know, already established and decent sized advisory firms, maybe around about the $500 million mark in terms of funds under management, who are also attracting private equity investment. So it's not just consolidation vehicles driven by private equity, but also smart, savvy, well-run regional businesses, if you like, who have attracted investment in order to grow either, you know, in their current sphere of operations, or to go from regional to national. And also there's another thing that we've noticed. We've got a client who is a service provider, and they are conscious of their client base being relatively small businesses with aging owner managers, who, when they come to sell, it's quite likely that they will lose that client once the business has been sold. So they're looking to match buyers and sellers within their own client base in order to defend their businesses. So that could be, you know, platform providers, it could be in investment houses, money managers, or it could be other service providers looking to defend their market share. we've got one client, I think I won't name them, but they had a kind of light bulb moment about 18, 20 months ago when they realized that there was a slight sort of attrition in client numbers, which once they'd done some research was explained by the aging nature of their clients. So they asked us to kind of build a sort of marriage bureau for their member client firms, so that we could facilitate the buying and selling of businesses within their client base. So we might see that being a trend going forward as well.
Otherwise, it's just demographics, I guess.
Demographics, yeah. I mean, people, none of us get any younger, so there will be a lot of businesses continuing to come to market in the coming years. I would expect, even if the government does want us all to work, longer into our dotage. But I think most people, I think when they hit sort of 60-ish, they'll find that they could do without the all-around kind of headache, stress, wear and tear that running, managing, owning a business whilst also probably advising clients. We all reach a point where we think enough's enough. And also, if you've been working hard for 40 years or whatever, and you've built a business and you've employed staff and so on, you reach a point where you think, right, I want to enjoy the benefits of this, cash in your chips and go and have some fun.
Mm-hmm. Exactly. And at the end of the day, these are financial planners. They do financial planning for their clients, and so they will have their own business plan with particular target dates in mind, won't they?
You would
won't just be a haphazard.
Well, you would like to think so, but it's actually surprising that you do come across a surprising number of people who have spent their working life looking after planning for the futures of others, but haven't spent nearly as much time as you would think planning their own exit and retirement. So yeah, I mean, that's kind of surprising. But yeah, most people have a plan in mind, and of course, there are a lot of smart people running small lifestyle businesses who have set up and built and run those businesses from the word go with a view to eventually selling them. So they're the smart ones. They've organized their businesses over the years to be ready to sell and to attract a good valuation. So yeah, there are a lot of very smart sellers. There are some who find that rather than banking a check, handing over the keys and heading off to the golf course, come to the realization that actually you're going to have to put another 2, 3, 4 years into this if I'm going to realize the full value. So again, it's like any other market, there is a very broad cross section, if you like.
Well, that's really interesting. Thank you, Norman. And it's given lots of food for thought and given us a really good picture as to where things are at the moment in the market for buying and selling. So thank you for joining us today.
Thanks for having me.
And hopefully we'll see you again at IFA Magazine.
Look forward to it. Thanks.
Thank you, Norman.
Thank you. Bye.